Hello and welcome to Business Incorporated, coming to you live from Channels Television, broadcasting from Lagos. I am Bolaji Akinwale. Today on the program, the third Capital Market Committee meeting of the Securities and Exchange Commission holds tomorrow. Lufthansa has cancelled almost 900 flights after it lost an 11th-hour legal bid to halt a pilot's strike. Plus a look at the domestic fixed income markets. Let's begin with the third Capital Market Committee meeting of the Securities and Exchange Commission, which will hold tomorrow, Thursday, November the 24th. The CMC is a body established to serve as a medium for exchange of ideas among market stakeholders, as well as for feedback to the SEC on how to continuously improve the market's activities and regulation. It is an industry-wide committee comprising members of the Commission, representatives of capital market operators and trade groups and other stakeholders, and the committee meets every quarter to deliberate on various issues affecting the markets and other policy matters. And the Monetary Policy Committee of the Central Bank of Nigeria has called on the federal government to evaluate its domestic indebtedness and put modalities in place for payments. The committee explained that the debt profile has resulted into a slowdown in economic activities. This comes as the committee leaves all rates unchanged at the end of its two-day meeting in Abuja.
Overall, members call for an enrichment of fiscal and other sector initiatives and interventions towards resolving the growth challenges in the economy in order to promptly revive confidence in the economy. Available data and forecasts of key economic variables indicate that the outlook for growth and inflation in the medium term continues to be challenging. Growth is expected to remain less robust given the absence of sufficient fiscal space, while the current tight stance of monetary policy and improved agricultural harvest are expected to contain further price increases and moderate price expectations as the trend has already revealed. Decisions. Committee assessed the relevant risks to the global and domestic economy and concluded that the risks to the economy remained highly elevated on two fronts, price and output. However, considering the importance of price stability and being mindful of the limitations of monetary policy in influencing output and employment under the conditions of stagflation, committee decided unanimously in favor of retaining the current stance of monetary policy, thus keeping MPR at 14% alongside all other policy parameters. In summary, all 10 MPC members voted to 1. Retain MPR at 14%, retain CRR at 22.5%, retain liquidity ratio at 30%, retain the asymmetric window at plus 200 and minus 500 basis points around the MPR.
Two economists who... Yeah, that was the Central Bank Governor, Mr. Godwin Emefiele. Let's take you to the markets in Europe, where stocks were trading mixed after opening slightly higher on Wednesday, with global sentiment buoyed by a rally in Wall Street that saw the Dow Jones Industrial Average close above 19,000 for the first time. The WTV financial correspondent Ulrich Bat joins us from the Frankfurt Stock Exchange. Ulrich, it's good to see you today. Now let's begin with the Eurozone Purchasing Managers Index out at 53.7 in November. Did it beat estimates by analysts?
Yes, it was a surprisingly large jump. Figure was 54.1 for November, and that's largely above the growth mark of 50%. And the people behind the index say that this points to solid growth ahead in the Eurozone. A powerhouse, Germany is still the main driving engine behind this, but France, the second biggest economy in the Eurozone, also contributing in a major way. The Purchasing Manager Index, it measures what companies are willing to spend, and so it's considered to be a good measure of the economy overall. And I think good news for everyone in the Eurozone concerned is that these figures mean, according to the experts, that employment is also going to be improving in a way that's the joint largest improvement since the beginning of the financial crisis.
Now, Italian banks recorded losses as the Italian referendum approaches. Shares of Banco Popolare, UB Banca and Banco Popolare headed south. Will this planned referendum have the same kind of effect that was seen during Brexit?
Yes, that's what everybody is expecting at the moment. One is bracing for the news on the Italian referendum. It could be a major market mover this year. Will it be bigger, perhaps, even than the Brexit effect or the effect of the victory of Donald Trump in the U.S. Presidential race? Some people seem to think so. Remember, since the Brexit and since Donald Trump's victory, share prices initially tanked, then recovered very quickly, and basically the market is in a great place. If there are worries about the Eurozone as a whole because of Italian starting to teeter, starting to, let's say, melt away a little as a stable country within the Eurozone, the things could be different. So in fact, people are a little worried that the Italian effect could be even worse than Brexit.
And the UK Finance Minister Philip Hammond is presenting his first UK budget today, known as the Autumn Statement, after saying that the country needed a fiscal reset. Is this going to be impacting on the markets?
Yeah, certainly on the British market, the pound, gilt, and also the FTSE 100 for equities, they will react, but of course, barring a huge surprise that would, of course, push Britain ahead, probably with massive spending or with massive tax cuts, it'll probably be something that people here in the market in Frankfurt or Paris or Rome, for example, will look at, but it probably won't move prices immediately. Still, the people are interested in the fact that the British government at this early stage is already doing something to counteract the bad mood in the British business after that Brexit vote. Lowering corporate taxes from 20% to 17%, that's seen with a grain of salt. Good for the Brits, probably, for the businesses there. But if Britain is entering into a tax war, into a tax dumping competition, nobody here in Germany or in many other countries in Europe is going to stand easy looking at that.
Thank you so much, Ulrich Bath, DWTV financial correspondent reporting out of Frankfurt. Let's take you to Germany, where Lufthansa has cancelled almost 900 flights after it lost an 11th-hour legal battle to halt pilot strike. The two-day action over pay began at midnight local time, and about 100,000 passengers are expected to be affected. The airline said that flights by Lufthansa's other airlines, including Eurowings, Swiss, Austrian Airlines and Brussels Airlines, are not affected. The industrial action is part of a long-running pay dispute at Lufthansa, with the union having organized 14 strikes since April of 2014. On Tuesday, Lufthansa made 2 legal challenges to halt the strike. A Frankfurt Labour Court first rejected Lufthansa's application for an injunction. Later in the evening, the Hesse State Labour Court rejected the airline's appeal. Pay talks between the union and the German airline broke down earlier this month, and Lufthansa said that the union had consistently rejected the offer of mediation.